This is ABC 10 Mornings at 9.
May is Social Security Awareness Month, what used to be treated as a pension of sorts for retiring workers, not such a sure bet anymore. To learn how to make ourselves more financially literate, we welcome in author and financial expert Michael Schaffer. Nice to have you here, Michael.
Thank you for having me.
Good stuff. And I think you want to break it down so people can understand it, and I think you cover pretty well. Is that you, by the way? Is that you with the
no.
with the pipe?
I like to think so, but yeah. It was an illustration done by a fellow named Ben Klein.
Okay, so plain talk. What are people, for the most part, not getting? What are they not understanding? Or more importantly, what's over our heads that we need to know?
Well, we need to know that Social Security is going to be an unpredictable situation over the next 30, 40 years. And it's not something we need to do our financial planning on. We need to invest wisely. We need to grow our money. And when I retired about 1.5 years ago as a financial advisor, I felt people were coming to see me without tools that they needed in order to understand what I was doing for them. So I decided to write this book and provide them tools that they can use when they work with a financial advisor that will make their understanding more of what they're doing stronger.
Yeah. Okay, so you have to calculate, one of your things is calculating their emotional relationship with money. What does that mean?
What that means is that we have a tendency to react to what is happening. Money is a situation where you can feel at that moment things are just fantastic, or at that moment you can feel things are falling through the floor. And this 20-question that you take in the book gives you an idea of your emotional situation, how you respond to situations, and it gives you a score at the end, and you can use that score in order to understand how you can work with a financial advisor, with your CPA, if you're an emotional thinker or not, and that plays a part into how you're going to invest your money, because you may do the wrong thing at the wrong time if you act too emotionally strong.
Sure. Should we approach this as a weekly type of thing, a monthly type of thing, in terms of simple tools that you have?
No, it's more of a monthly situation. I have also in the book where you can have tracking the S&P interest rates, what the Federal Reserve does. You don't have to watch this on a daily basis. You're not a trader, you're an investor, you're there for the longer term. But as long as you know the trends and you can work as a partner with your financial advisor instead of a bystander and just accept whatever he's doing for you or she's doing for you, you're in a much better situation.
Are these all things to do prior to retirement? Because I know my in-laws have retired and they are like watching all the stock tickers, 3, 4, the markets are down 20, the markets are up 30. I'm like, I don't know. I think that would drive me crazy once I retired to do that.
It's not necessary. It's not necessary. I mean, we live longer today, and therefore the trends are going to be generally on the upside, but we will go through recessions. We do have an economic cycle. So you need to be able to follow through and hold tight with your investments and have it do the work for you. But you need to keep an eye on it, but weekly, daily is a little bit much.
When people start to see a downturn, this is probably the basic question, is when a downturn is coming, do you ride it out knowing that it will get better, or a lot of people start to dump some things or they convert to cash? Are you a ride it out guy?
Not necessarily. I mean, you have to know what the situation is behind the sell-off. I mean, right now we're dealing with the Federal Reserve just trying to raise interest rates by 0.25%, and it kind of gets people upset. It's only 0.25%. The economy will survive. If we start seeing major inflation, if we get to another housing boom without real backbone to it, you know, these are flags that you need to watch out for in the big scale. But if you're just dealing with everyday nervousness that happens in the markets, definitely ride them out.
That's not a good way to spend your retirement, is sweating every market update.
That's not what you work so hard for.
I would think so. Mr. Schaffer, thank you. It is an Understanding Investing with Plain Talk and Common Sense. Michael Schaffer, where can you get the book?
You can buy the book on the website that I've developed called plaintalkinvesting.com.
Okay.
You can also buy it at Amazon, Barnes & Noble, all the major outlets.
All the important food groups.
Right.
Okay, thank you, Mr. Schaffer. Amy, over to you.
All right, thank you so much, gentlemen.